I'm going to tell you why I think we are in a position that it is the only chance, probably, or one of the few chances we can get to become rich. And I'm talking about us, I am included, who are not millionaires. We're not even close of making $100,000 per year or having a fancy lifestyle, having a fancy job. I'm talking about guys like me who don't make a lot of money, but are indeed planning for a very good retirement, a very good life prospect, and for someone who is financially smart with their money. I personally am saving more than 50% of whatever I make. I am investing that money, and I think this opportunity right now with the current market, as is the situation that we have right now, is something that will probably not happen, or it will be extremely down the road like for something like this to happen. And I'm gonna tell you what I am doing, what is the strategy that I'm following to be able to maximize my profits and maximize my opportunities for my future me. So this plan is not much focused on making money right now, but is more focused on getting in now so that future me will be very thankful that I did what I did today. So it is preparing for the future. It's kind of like a proactive thing that I'm doing right now that will pay off in the future. Not so much right now in the short term, but we're talking 10, 15, 20 years down the road. For crypto, it might be a little less because crypto moves at a faster rate than the stock market and other markets, but it applies for everything. So with the current market, we have Bitcoin stuck in that box. It was stuck in another box, but now it is in the $19,000 to $21,700 range, more or less. It is kind of stuck going sideways inside that. We don't know how long it is going to be inside that box for, but in the daily chart, we see that it's going sideways. And if you zoom out to weekly or monthly, we see that we are in a very downtrend. Both stocks and crypto are reaching all-time lows. We see the S&P 500 going down, specifically tech stocks are going down, Tesla's going down, PayPal's going down, and all these other companies, mainly the tech sector, is melting. And of course, we have crypto, we have AVAX, BNB, Solana, even Bitcoin and Ethereum themselves. They are pretty much what dictates where the market is going for crypto. And to make things even a little bit worse, inflation is climbing at a very fast rate. And for some of us, if you are a Gen Z or whatever it is the new term, this might be the first time for you living in a world where the inflation is so high. It is the highest that you've ever lived to see. And because of that, we see that personal savings, it is at a critical low, a historic low. It is not at all-time lows, but it is very close to. And following that, credit card debts are higher than ever. So people are maintaining their lifestyle, their expenses, but they are saving less and spending more with their credit cards. So sometimes even spending more than they can afford. And we have the Doomsday Prophet himself, Michael Burry, talking about inflation. He's been warning us about inflation. He's been warning us about crypto. He's been warning us about a ton of stuff. And a couple of these very interesting factors or prophecies that he made pretty much are already becoming true. We know he has a history for being always very early. Even Elon Musk said that he is like a broken clock. But he was right so far with inflation, and he pretty much called the all-time high of the crypto market. So he still believes that there's a lot more room for the S&P 500 and consequentially also crypto market and all these other markets to fall even more. So taking all of this in consideration, how are all these bad news good for us? So as I said before in the beginning of the video, by following this strategy, which for some might be a little strict, you will be taking actions now that will be profitable for you in the future. And we're talking here over 5 years. So this is not a short-term thing for you to be doing. If you're a short-term kind of guy, or your strategy is short-term for like max 5 years, then this strategy might not be good for you. You might gonna be looking to buy right at the bottom, which again, it is very hard for you to do because no one can predict when we actually hit the bottom for stocks, for crypto, for anything. It is very hard for you to buy at the bottom. And the strategy that I'm going to be showing you today, you don't actually have to buy all the way at the bottom. You don't need that accuracy that is pretty much impossible for you to predict where the market's going to bottom out. And this strategy consists in 4 steps. So let's take a look at step number 1. The first step is to have liquidity available. Now, this is the step number one because it needs to be done before something happens. So you don't know when the market's going to bottom, or you don't know when the market's going to go down. So you need to have this cash, this liquidity available for you to be able to profit, for you to be able to get these assets that you want to get, where you can basically buy these tokens that you believe are going to do well, you believe they're going to perform fine in a couple of years, and you can buy them now for basically a sale price, because when everyone is selling, when there's a massive selling pressure on the market, you will be the one buying. Of course, you're not going to buy everything that you have in liquidity. You're going to have to find a strategy, a good strategy for you to find entries when the market is going down. But we need to understand what is liquidity. So liquidity is for you to have cash or cash equivalents in hand. So we already know what cash is. But what is a cash equivalent? Pretty much a stock or a popular crypto, let's say AVAX, Phantom. They are cash equivalents because they're very liquid. You can basically just open up your trading app or your brokerage account and you can sell immediately that stock that you have, and you will have that cash right in hand. Pretty much same thing goes for crypto. If the pair has liquidity, you can pretty much sell that token immediately and have money in hand. But for crypto, what I'm going to be considering as liquidity, at least that works out better for me this way, just because we have less volatility, is to have stablecoins laying there in your wallet, or maybe farming, staking that stablecoin somewhere where it is not locked up. So when I say liquidity, I'm usually talking about cash, fiat currency, or pretty much stablecoins, which you should know already if you're watching this channel for a long time now. I use USDC, I use DAI, and I use MIM. MIM, very little. There's just a couple of protocols that they work with MIM, which then I need to have MIM instead of USDC or DAI itself. But pretty much these three right here are the main ones where I keep my liquidity. So usually I keep 20 to 25% of my whole portfolio, of my whole crypto portfolio, in stablecoins. So you say, why do you keep so much money sitting there? Well, because with stablecoins on crypto, you can actually get a yield on your stablecoin, so on your dollar. And you can find here on my channel a bunch of protocols, stablecoin protocols, where you can stake your stablecoin and get a yield on it. Of course, there are some that are more risky and of course pay you more, and others that are safer, are on the safer side, and you get a lower APY, but you will also be getting less risk involved with this strategy. So I have 20 to 25% of my portfolio always in stablecoins, and they're farming across DeFi. So it is a bunch of different blockchains, it is on a bunch of different protocols, just because I don't trust for all that capital to be sitting in one only protocol, because that already happened to me and with a bunch of other people, to invest, to leave our stablecoins in one place, and the protocol eventually suffered great losses. Not even the protocol, but the token itself. And I'm talking about Anchor, and I'm talking about USD. The majority of my stablecoins before, they were all staked in Anchor for that 20%. And you know what happened with USD and eventually with Anchor. So this is why right now I keep my liquidity spread across a bunch of different blockchains. And connecting with this on why do you need this liquidity, we go to step number 2, which is to invest in good assets when everyone is selling them. So whenever there's fear in the market, whenever everyone is panic selling, crypto that for you is considered a good crypto or a good asset. So for example, blue chips or Bitcoin and Ethereum, whenever people are selling them, this is the opportunity for you to use a little bit of that liquidity that you have to buy these assets. Of course, if you are like me, you're already buying in monthly. So I am DCAing every month. I buy some Bitcoin, I buy some Ethereum, I buy some of the favorite blue chips that I have. But with this strategy, I'm not going to be buying just once per month. With my strategy, I'm also going to be buying some with the liquidity that I have already in DeFi. So if I see, for example, Solana has gone down 20% in a couple of days, 2 or 3 days, hey, I'm going to buy a little bit of Solana over there. If I see AVAX has had any major news that made them go down even more, they're like at $10, $9, whatever, I'm going to buy a bunch of AVAX because I do believe in AVAX. Same applies to Ethereum, same applies to Bitcoin. Of course, these are the major ones that you should be focused, because they are the biggest ones and they lead the market. And right now, Bitcoin at 19,000 and Ethereum 1,000. I don't think we will see that again in the near future. Once they start to rally back up, I don't think we will see these numbers ever again. So there's a very fine line here on the term blue chips because if we're talking about the actual term blue chips, which means that it has been through a crypto winter or a bear market, then AVAX, Phantom, and Solana, they cannot be considered blue chips. But for me, since I believe in the projects that they have and the blockchains that they have, the technology that they have to offer, I think BNB, AVAX, Phantom, Solana, Polygon, these are all blue chips in my books, and I am buying more and more of these tokens when I have the chance to do so. And how can you prepare for when the market is down? How can you know when the market is down 20%, 30%, 40% for you to get into these trades, into these buying positions, into these buying orders? Well, this is where, for me at least, limit orders come in. So I have a bunch of limit orders already placed into centralized exchanges or decentralized exchanges that allow me to do so, where I just place an order. Let's say, for example, when Bitcoin a couple of weeks ago, when it was around $28,000, I had a bunch of buy-in orders already set up at support levels. So I had at 22,000, I had it at 21,000, and I had it at 19,000, and all of these were executed. So automatically when it reached that price, I was buying a little bit more in Bitcoin. So if your exchange allows you to do so, if it is a big centralized exchange, of course, it will have for sure limit orders. Limit orders are very common now in centralized exchanges. So every centralized exchanges that you use should have limit orders. So make sure you have some cash, some liquidity over there in these centralized exchanges to be able to execute these orders when you place them. So you now might be asking, when should I buy? Because I know okay, I have to put limit orders, or I should put limit orders here in support and resistance. But why right now and not maybe in the next support and resistance and the next bear market? Why should I have to buy right now when the market's going down at this time specifically? Well, I think the answer is obvious, that the earlier you get in stocks, crypto, whatever, the earlier you get into an investment that is for the long term, the more time you would have in the market, and the better it will be for you to dollar cost average, or for you to get dividends, for you to generate some sort of yield from your position. And we're seeing right now the Fed slowing down the economy. So not only in the United States, but this will also apply to the world itself. We already see the economy slowing down here in Brazil, but of course the main focus is the Fed itself, because they are slowing down economy, and that will make stocks and consequently will make also crypto go down by a ton. A fellow YouTuber called Steve Antonioni, he explains it way better than I do. So let's watch a snippet of his video where he talks about the Fed, and I'm gonna leave the link for that video in the description. You can check it out.
They're going to kill the economy. Now that might sound a bit dramatic, but that's actually kind of what's happening right now. The Fed is basically attempting a controlled demolition of asset values, because now they are reversing everything. Instead of allowing interest rates to go lower, they're actually cranking them up, way up, and really fast. The fastest they've ever done it in the past 40 years.
So this will be a very good time for you to buy these assets that you believe eventually in the future will go back up in price, because you basically are buying that in sale. You're gonna get a Black Friday for these tokens, these assets that you believe in. Let's make a practical example. I like coffee, and I buy this coffee right here every other week or so, and I pay around $2.80 for this coffee bag. Let's say next week, when I go to the market to buy more coffee, because I am an avid coffee drinker and I ran out of coffee, I go there and it is no longer at $2.80, but it is now at $2. So I love coffee, I enjoy the product, and I think this brand specifically should be worth way more. They are a very new brand, and I believe they eventually in the future will grow to be one of the leading companies in this sector. So what should I do? Why shouldn't I buy more coffee? Since I do enjoy coffee, I am utilizing coffee on a daily basis. It is working fine for me when I need to study more, when I need to work extra hours, when I need to wake up. This coffee is really strong. So why shouldn't I buy it? Because other people are scared that the coffee now sucks because it is cheaper? Well, no, I enjoy this coffee. I should buy more of this coffee. So that should apply the same thing for the stock or the crypto market itself. When you're using AVAX, let's say, or you're using Solana, and they are really, really fast, and they're doing amazing things with their blockchains, with how they implement technology on their respective fields. So why shouldn't you buy more right now what is cheaper? Why would you buy it when everyone else is buying it? Since you already know it works, you already know it is fast, you already know it is reliable. Well, not in the case of Solana, still not very reliable, but you get my point. But this pretty much shows that when we're talking about stocks and crypto, people people tend to buy when everyone else is buying, but this is not the best time to be buying actually. The best time to be buying something that you enjoy is when the prices are down. So why would you pay more for something that is cheap right now? And this brings us to step number 3, which is invest in knowledge. So why would you invest in knowledge? Well, you already saved enough liquidity and you already set some orders for you to buy your blue chips or tokens that you believe will perform well in the future. Now you should be focusing on learning more about crypto, how they work, proof of stake, proof of work, how a smart contract works, whatever it is that you need to learn. Learn about DeFi, learn about NFTs, learn about a specific topic in crypto, learn about technical analysis, because when you acquire more information, when you acquire more knowledge, you'll be able to find entry points and maybe other assets that other people haven't even considered. Of course, you're not going to be the first one to find anything, but who knows, you might be an early adopter. And you know, these sort of things repay you in the future. For example, early adopters of Optimism, they got rewarded with the Optimism airdrop, which I was part of. I was one of the few people who received the OP token because we were really early on testing the project, the product itself. So by investing, by learning more about the market, learning more about crypto, specific crypto areas, specific niches and topics on crypto, you will find better and early opportunities than the rest of the people that mainly follows YouTube, mainly follows crypto influencers. They buy signals, whatever they're doing. If they are following someone else, they are going to be slower than you because you're not going to be following anyone, because you will be getting these deals, finding these opportunities early on. So how can you learn more about crypto? How can you learn more about all these things? Well, of course, you can watch YouTube videos, you can read online, you can read articles, you can read Medium posts, article posts, and Twitter. These are very important places where you can find knowledge, and very good knowledge. You have to filter a little bit what you're looking for, but you will find very, very important knowledge over there. But I also have a place where you can find a ton of crypto knowledge, which is in the Sleep Money Club, which I'm part of. And this is a private Discord that I'm part of. It was created by your friend Andy and the Decade Investor. But right now we are over 14 YouTubers over there. Other than Andy and Colin, we also have James Pelton, which is really famous right now. We have myself, we have other smaller creators. But that's not only it. We also have moderators, we have people who create content specifically for Discord, and they are also there to provide you with great quality content and knowledge inside the Discord itself. Another thing that we have are niche specific sections. So we have a yield farming tab, which is where you find me the majority of the time. We have an NFT, mining, utility nodes, blue chips, crypto blue chips, crypto in general, stocks, options, even real estate. So you find everything, and there's always a specialist, someone who knows and understands about these kind of stuff in each and every niche. You also will have direct contact with me and these other creators on Discord, because you can pretty much just add us, just tag us and ask us any questions you want. And of course, I spend the majority of my research time on Discord, and I'll be able to reply as fast as I can. If I don't know, other people, even other users that know what they're talking about, will be able to answer you on and help you with whatever you want. Now, something that for me is really, really cool, we are creating a directory. There's already some material there for people who are beginners in crypto. So it teaches you everything from the very beginning on how you can get all the way to DeFi. So it helps you creating MetaMask accounts. It helps you migrating from centralized exchanges to your MetaMask, bridging, impermanent loss, liquidity mining, everything that you need to know. We are going to put in that directory. Just go there and you'll find a bunch of useful information for you that is a beginner. Eventually we'll have more stuff coming. This is a very new project, but we're working to give you as much content, as much premium content as we can deliver. So this is a very good place, not only because of me, but also because of other creators and people behind the scenes who are making this a very profitable investment for you, for your knowledge. So make sure to check the first link down here in the description, where you can find the link to subscribe to the Sleep Money Club. And last but not least, we have hedging. Hedging is a very important step, all of these four that we are talking about, because hedging is what will keep your portfolio alive when the market's going down. Everything that I said right now doesn't mean that you are not going to lose. You're not going to see red days on your portfolio as well. You are. Everyone that I know, there's not even one guy that says, hey, I'm printing money right now, I'm positive my portfolio hasn't suffered anything from this crypto market. Well, This is just not true. Everyone has been suffering from this crypto market. And there's a couple of strategies that you can use to hedge. And of course, hedging doesn't mean you'll be making way more money during a bear market. No, it means that you will be losing less money into a bear market. And this is good because our main goal here is not to win them all, but it is to lose the least that we can. The less money that we lose, the more money we have to reinvest in other projects and make that profit back. So the first one that I am doing right now, and you can also do that if you know what you're doing, is to buy put options, crypto options on Dopex. Of course, Dopex is not the only one. I use Dopex to buy options, not to sell them. I'm going to be talking about selling options in a little bit. But for you to buy puts, I'd say go to Dopex. If you don't know what puts and calls are, I'm not going to stay here explaining them to you. There's a ton of videos about options, both for the stock market but for the crypto market itself here on YouTube. You can just check them out. But basically, you are kind of like shorting the market using derivatives. I know we are far from the bottom, but I don't know where that bottom is going to be. I just think that where we are today financially in the economy, we still have lots to go down. This is why every month I buy some puts. So I don't buy a lot of puts just because I'm not trying to gain when the market goes down. I'm not a bear, but because it will protect me like some sort of insurance. It will protect me if the market goes down. If I buy a put for Bitcoin for $15,000 and Bitcoin goes to $10,000, I will be profiting all the way down. That put will be a very, very good thing that I did. But now, if Bitcoin never reaches $15,000, I'm okay with losing that premium that I paid for that put. The put's gonna expire worthless. But for the time frame that the option was available, I had this insurance. If it went down, I'll be at least making some money back on what the market is going down. Another thing that I do is selling options. Now, selling options, I do a lot. This is the preferred thing that I do right now. I used to do that in the stock market a lot. It's called synthetic dividends. It's a way for you to make dividends from a stock that does not pay dividends or that pay very little dividends, but it is basically selling a covered call, or you can also sell a cash covered put. These might seem hard to do, but they are very basic and very easy for you to do. If you're using, for example, I use Friction on Solana. We also have Katana. They're very similar, but I prefer Friction because of the UI. It's a little bit better. So I enjoy Friction a little more than Katana. We also have Nuts. I've been using Nuts a lot more recently. They're deploying a ton of other strategies, but I sell my options on Friction or on Nuts. And this gives me a premium each and every week that I can then buy back and reinvest, buying more tokens. Another way for you to hedge your position, hedge your portfolio, is to buy tokenized precious metals. So I already talked here in this channel a little bit about Horus. Horus is a decentralized platform where you can buy gold, silver, and platinum, but the tokenized version. So the crypto versions of the gold, silver, and platinum. And what does that mean? It means that they are crypto tokens that will follow the actual price of gold, silver, and platinum, and you can store this in a vault that you get, sort of like a debit or credit card. And of course, gold and silver are really good when the economy is slowing down, when the market is going down, because silver and gold, they tend to keep their price, they tend to maintain their price. So here's a good way for you to hedge your portfolio to the exposure of the market. And another thing that is very dangerous, I do this sometimes, but I don't recommend if you don't know what you're doing, is for you to short the market. You can leverage and short the market. Now, this is very risky because there's tons of risks of you getting liquidated. I consider these to be way more dangerous than, for example, options. They are derivatives. You can get hurt pretty bad with options as well, but with leveraging, with shorting, you can get screwed over really, really hard. But this is also very profitable in a bear market like we are right now. You can short or you can long the market. Right now, since we are in the bear market, shorting the market would be profitable in the event that the market goes down even more.
Object to the test!
Good.
Now, hedging doesn't mean being a bear. When I see a bunch of people talking about hedging, they're usually saying that these people are bears, that they are betting against the market, or they're betting for the market to go down so they can profit. No, hedging is more like having an insurance, protecting your portfolio for when eventually the market goes down. As I said, for the put options that I'm buying, sometimes they expire worthless. I lose that money that I invested, but it is an insurance policy for when the market goes down, because I cannot predict. So every month I go there, buy some puts, and eventually, if these puts expire worthless, at least I had an insurance protecting me for that period of time. Now, this is what hedging is for. So considering all of these 4 steps, let's recap them. The first one is to have liquidity. And once you have liquidity, you're going to invest in assets that you think are good. Your blue chips, your Bitcoin, your Ethereum, everything. So you're going to invest in good assets. The third one is invest in your knowledge, because knowledge is power and it will give you more opportunities, more insight into the crypto market itself. And the last but not least, it is hedging. It is protecting your portfolio against a order more down in the market or a meltdown of your portfolio itself. And of course, hedging can be profitable, especially in these times of meltdowns or sideways market. In a sideways market, if you have a crab strategy, you can be very, very profitable when everyone is pretty much just not gaining or losing anything. You can be getting a yield on a sideways strategy. So these are the 4 steps that I'm currently doing. This is the strategy that I'm currently doing here in this bear market. Of course, I think we are far from over. I still think the crypto market will suffer a lot more. I still think the stock market will suffer a bit more. We still have a couple of Fed meetings this year. I advise you to check out some videos. I'm gonna leave them here down in the description so you can kind of understand what is going on with the economy, the United States economy, which pretty much dictates global economy. So if you understand at least a little bit on what that works, you know what will happen to your country or to any other segment of the market. So this is it for today's video. I hope you guys enjoyed. I put a lot of effort into this video. So if you enjoyed, take 1 minute of your time, just one, not even that. It's probably going to be 30 seconds max, and scroll down just a tiny bit and you like and subscribe to the channel. And you can also turn on the notifications so you don't miss these next videos that I'm going to post here. Of course, as I said in the previous video, I'm going to start to reduce the amount of videos that I'm posting, but to create more quality content that brings you knowledge like this one that you're seeing today. So if you enjoyed the knowledge and if you got all the way here to the end of the video, thank you so much. Comment down below something so I know you got here all the way to the end of the video, and maybe share this video with someone who might be having hard times right now in this crypto market. Anyways, thank you so much. I'll catch you guys in the next one. See you.